Good morning, everyone, and welcome to this morning's live stream. It's the morning market review, and it is the 9th of February, Friday, the 9th of February. My name is Russell Shaw. I'm a senior market specialist at FXCM. Just going to go ahead. Let's bring up the disclaimers before we get on with the analysis. And here is our high-risk investment warning. I'm just moving the camera out of the way. If I can get you just to have a read through that high-risk investment warning, I'll keep it on screen for a few moments. Another 5 seconds. Okay, let's bring up the market commentaries disclaimer. I'd like you to have a read through this as well. I'll just keep this on screen for a few moments. Okay, very good. Let's go ahead and start off the analysis with the real rate. Okay, this is the real rate. Okay, this is making me nervous. This chart is making me nervous, and that's how we're going to start off with the live stream. Why is it making me nervous? It's moving up. It's moving up. We kind of got this movement up with a real rate. We are in the midst of resistance. Hey Raj, good morning to you. Welcome. Thank you for joining. We are in the midst of resistance, and logic would indicate that given that we are in a year where there's going to be a loosening in terms of monetary policy, we would expect the real rate to come down. We're not seeing that. It's moving up. Okay, it's moving up. And the real rate's a key driver in the markets. So if it's moving up, it's going to have implications in the market, and as traders, it's going to affect us. You can actually see that the RSI is above 50, and this is a daily chart. So sort of in the near immediate term, we're getting this upwards pressure in rates. Let's take a look at this on the weekly chart. All right, so let's just take the drawings out. I think what we've got to be cognizant of here is the RSI of the weekly chart. Let's just make this a little easier to read. There we go. So just keep an eye on the RSI relative to the 50, okay? And if it crosses above 50, we're kind of in a different regime, a different, all of a sudden, interest rates are starting to move up. Gee, that's going to be very, very interesting because it's going to act as a headwind on markets. Hey, Anna, good morning to you. Okay, let us do some correlations with the real rate. What are we talking about here? Why do we start off with the real rate? And the fact that the real rate's moving up, what's the big deal? Okay, so let's start off with the US dollar. Let's bring in the US dollar underneath us. And I think that you guys should be getting used to these correlations now, right? So the real rate starting to pick up. Well, the fact of the matter is there is a fairly strong correlation. Hey, Kim, good morning to you. There is a very strong correlation here. We've seen it again and again and again. Here is the real rate moving up. Okay, here is the US dollar moving up. Okay, here is the moving down. Here is the dollar moving down. And here is the real rate moving up. And here is the US dollar moving up. And again, this is going to be just interesting to see how it plays out. I'm of the opinion that the rate should be coming down, not going up. But the fact of the matter is that the March rate has been priced out. We're now looking at the May rate. We've got to take a look at the data. Some important data coming out. Today, there's going to be revisions to inflation data. Okay, so we want to see what these revisions are. Are they going to be revised upwards? Are they going to be revised downwards? Okay, so keep an eye out on some sort of news that comes out that way. Tuesday, we're going to get CPI data coming out. So we want to see if that inflation carries on moderating towards 2%. I'm of the opinion it isn't going to moderate to 2%, and that's why I think the rates are going to come down. But the fact that we're tightening up here, I don't like that, okay? And just something Raj has put in here. So this is really, really interesting. I'm going to take the US dollar out. Let's just focus on the real rate. So Raj is just saying, look, there looks to be a reference candle coming out on the weekly, and he's right. So if we get a pop on the RSI above the 50, well, that's going to be, I think, a drag on the market. And you can see that we're actually getting the reference candle out here. This was a good spot, Raj. Okay, so okay, there's the reference candle. And then it looks like we're going to close above the reference candle. That's conditions 1, 2, 3. Hey, Mia, good morning. I'm just going to put on a fan. If the fan interferes with the audio, just let me know and I'll turn it off. Okay, just putting on a fan next to me. But you can see, so we've got this real rate, pushing up. We've got and what have we got here, Raj? See that RSI is going to pop 50 as well. It looks like it's going to pop 50. And then we've seen the correlation of the US dollar. Well, if it's going to pull the US dollar up with it, well, the other majors going to have a headwind, aren't they? But there's other relations. There's other relationships that we have to be cognizant of. Let's bring up NASDAQ. Okay, so NASDAQ is very sensitive to interest rates. So let's just click plus, and let's just bring NASDAQ underneath. Okay, and let's make this logarithmic. All right, as the interest rate moves up here, you've got the NASDAQ moving up. Okay, as the real rate comes down, sorry, I want to read it. As the real rate starts moving up here, it starts putting a pressure on the NASDAQ there. As the real rate starts coming down here, it acts as a tailwind. And then we've got this anomaly here. So here's the anomaly, okay, in that we've got this kick up in rates there, and then some sort of a break over here. Let's put it there. As the real rate starts moving up, one would expect it to actually impact negatively on the NASDAQ, but the NASDAQ's actually pushing along really, really well. Let's just explore that on a fundamental basis, because I think there is a story here, but okay, ultimately I think that the real rate will act as a drag. So just take a look at this. I'm going to My photo shouldn't be covering the chart. Can you guys see the chart? The camera shouldn't be covering the chart. Just let me know that you guys can see the chart. Anna, just confirm with me. All right, I'm going to just draw in a formula here. And the formula is as follows. Present value. Oh, okay. All right. Okay, good. Present value equals cash flow divided by 1 plus, let's make this R to the N. Okay, this is your basic value of money formula. And what's happening here is that the interest rate's moving up. If interest rate is moving up as per this arrow here, the R stands for required rate of return, which includes interest rates, right? Includes yields. Well, yields would be moving up, but the 1 plus R to the N is actually on the denominator side. So the fact that it's on the denominator side suggests to me that the present value should be coming down. Let me try that again. I want a down arrow. Here we go. So if R is kicking up, we should get a present value that's moving down. We're not getting that. You can see that as the interest rate's kicking up here, we're actually getting a movement up here in present value. And the reason that I think that we are getting the movement up is because cash flows, or the numerator, is moving up. The earnings have been really good on by and large from the markets, and I think these earnings are basically trumping the interest rates. And I think that the market is being driven I'm talking stock markets, largely being driven now by the earnings season rather than the interest rates. But the idea is interest rates are still a factor. And as long as we have this movement up here in interest rates, according to the time value of money formula, I would suggest that there is going to be some sort of impact on the present value. If there's going to be some sort of impact on the present value, I think we've got to be very, very careful with stock markets. And there are a couple of things here that I think are going to add to the fundamentals. I think there's a few technical issues which are going to play into the fundamentals. What are the fundamentals? Fundamentals that the interest rates are moving up. If those interest rates are moving up, I think eventually they're going to start biting into the impact that the numerator is having. Okay? Does that make sense? At the moment, the numerator seems to be driving the risk markets, but the fact of the matter is we're still getting this upwards movement in the real rate. And if we're getting this upwards movement in the real rate, I think that there is headwinds that are building on the stock market. Does that make sense, guys? Just let me know. Okay. Now, why I think we have to be careful is a few things. Okay. Let's just go through to S&P 500. Okay, and I'm bringing up the weekly chart of the S&P 500. Okay, you should be able to see this. I'm moving it out of the way. There should be no camera interference at all. Now, take a look what's happening here. Technically speaking, we're getting overbought on the S&P 500. Okay, so I think that now I'm not calling for a trend change. I'm still under my view is we're in a bull market. I don't think that that's changing. What I'm saying is with the interest rates moving up, it's creating a headwind. And the fact that it's creating a headwind, and the fact that the S&P 500 is now overbought, okay, well, maybe there's going to be some sort of profit taking and some kind of pullback. Now, if you take a look at the NASDAQ 100, let's just bring up NASDAQ 100. It's not quite overbought yet, but it's tending towards overbought. It's tending towards overbought. So I think in the near term, we have to be careful. And why do we have to be careful? I think that there is a lot of froth that's starting to manifest. Yesterday we saw NVIDIA shares are heavily overbought. Okay, we can see that the S&P 500 overbought. We can see the NASDAQ tending towards overbought. We can see the real interest rate starting to move up. We can see that the time value of money puts interest rate as a inversely related variable to present value. So if interest rates moving up, there should be some sort of overhang on current values on the stock market. The revision today in inflation, keep an eye on that. If it's revised higher, I think that could be a catalyst where there could be some profit taking. Keep an eye on CPI that comes out on Tuesday. If that comes in higher than expected, it could be a catalyst. Okay. If we get a revision downwards today, and if the CPI comes in lower than expected on Tuesday, then I think we actually see the real rate come down. So this is the contra. If the real rate comes down, then I think we actually move from being a headwind against the risk markets to a tailwind. So there are some fundamental news specifically around the inflation data that we have to pay attention to. Again, I want to reiterate the revision today, I think, is going to be important. Tuesday, I think, is going to be important. As I was saying, the story continues. By the way, what happens if we do get a pullback here? What happens if we do get a pullback? So let's just say, let's go back to let's go to SPX 500, and let's take a look at this on a weekly basis. Okay. Now, if we get the pullback here, and that heads back towards that moving average, Anna brought it up yesterday. Again, Anna, we don't necessarily need to get the pullback. We can sort of get like some sort of shallow movement. That would still take the froth out. That would take a lot of the froth out. Okay, but let's just assume some sort of pullback. Let's go to the daily chart. I just want to take a look at RSI on the daily chart. Okay, it's overbought as well. So even on the daily, we're looking overbought. I'm just going back to weekly. All right. I think that provides opportunity. Why does it provide opportunity? Because if you go back to that time value of money formula, the numerator is still strong. So if the numerator is still strong, I think that as there is some sort of pullback, it gives bulls the opportunity, okay, it gives bulls the opportunity to effectively buy in at a better price. I think AI has been a huge factor on the NASDAQ, huge factor. So this is from Hitch OXG, huge factor. It's that is driving the numerator. There's catch up here. Yesterday we did a whole live stream on AR. That AR, not only ARM, NVIDIA, there is a Microsoft's embracing AR. It's a huge driver. That's the numerator. So if there is any sort of headwind that comes up because of the denominator, because if it comes from the denominator, they still support the earnings growth holding up. What we want to see is we want to see moderation in inflation. We want to see the fact that the Fed is being given the opportunity to loosen policy. And if we get there, then we kind of move into that Goldilocks type of environment. It's beautiful. It's exactly where we want to be. And if we get dips, in this uptrend, dips in the uptrend, that's beautiful. Then we start looking for the opportunities. Okay, so you take a look. Yeah, exactly. That chat. Well, I'll bring up the chat ETF right now. It contains the Magnificent Six, right? Anna contains the Magnificent Six, right? All the usuals. So let's just take this arrow out. If the rate drops, do you expect the US dollar to drop next week? That would make sense to me, Kim. It would make sense to me. I mean, I cannot guarantee it, of course. But if the rate drops, I would expect US dollar to follow it down. Yeah. But guys, what are we looking at for here? Let's just bring in some. Okay, let's go. Let's put in some peaks and troughs. I'm very excited. Yeah, I think I've been flat over the last few weeks, Anna. I needed to bring in some life to the live streams. All right, let's just bring in let's put in the zigzags. Let's put in the zigzags. It's much easier if I do it on Microsoft Paint, but I'm just going to do it here on the TradingView platform. Okay. All right, let's put in one more. Let's put in one more line. Okay, so the key here. What is our trend? Well, the primary trend here is up, right? The primary trend here is up. Let me move this out. The primary trend here is up. Okay, I think we can all see that we've got a higher trough followed by a higher peak, followed by a higher trough, followed by a higher peak. So if we've got a primary uptrend, well, here's a primary uptrend right here. Let me move this guy out of the way. So here's your primary uptrend. Here's your primary uptrend. Okay. Well, if that's the case, then any dips become exceptionally exciting, don't they, Anna? Any dips here become exceptionally exciting. So if we get pullbacks, if there's going to be some sort of drag, fair enough. Let's get that oscillator normalized, and then let's look for indications to see if those dips are supported. And if those dips are supported, boom, we're in business. Okay. Does that make sense to you guys? Let's just bring up that chat ETF. So this is an AR. This is an AR ETF. It is just absolutely insane how good a trend this is. Let's bring up the chat. And you can just see this is what we looked at yesterday. And you can just see that it's tending towards overbought. So that AR story probably heading towards a little bit of inflection point. What do I mean the inflection point? I think there's going to be profit taking. Why is there going to be profit taking? We're getting overbought. We're getting interest rates moving up. If you were a portfolio manager, you'd probably be thinking, this is a good time for me to bank some money. Price comes down in a little lower. Bang, you go back in at a better price. Hitchcock, there is a path drawing tool under the paintbrush to draw the arrow stuff. Okay, I've got to figure it out, Hitchcock. I'm not sure how to pronounce exactly your name. I'm going to do Hitchcock's G. I'll take a look at that. Yeah. Anyways, let's wrap up here, guys. If there's any questions, go ahead and pop those questions in now. Otherwise, we'll do it all again on Monday. I'll set up another webinar at Monday, 7:40 GMT. Any questions? All right, nothing coming in. Let's wrap up here, guys. Thank you very much for joining me this morning. I will request, if you found it helpful, just go ahead and click on that boost button. Just helps me disseminate the live stream. Okay, but only if you found it useful. All right. Click the rocket, yeah. All right, guys, let's wrap up here. All right, have a good weekend. Catch up with you guys on Monday. Cheers, guys.